The typical senior homeowner in the United States paid around $4,271 in property taxes last year. But here's the part most people don't realize. About 92% of them paid more than they were legally required to. Not because they made an error, but because there is a single form that can significantly reduce that bill. And the majority of senior homeowners have never even been told it exists. The AARP Foundation has confirmed this. Roughly 9.3 million older Americans qualify for a property tax reduction that they are legally entitled to receive. Yet only about 8% have ever applied for it. That leaves the other 92% paying too much every single year. And there is no system in place that actively informs them. But here's the question you need to stick around for. Even among seniors who do find this form and submit it, many still get denied. Not because they don't meet the requirements, but because of one specific section on the application that is commonly filled out incorrectly. Counties don't return these applications for fixes. They reject them, close the case, and the opportunity is gone for the entire year. I'm going to show you exactly what that section is. But first, let's talk about how much money is actually on the line. Here's what we're covering in this video: the name of the form and how it works, the potential savings, which can range anywhere from $30 to as much as $6,500 annually depending on where you live, why 92% of eligible seniors have never submitted it, the exact mistake that causes most applications to be rejected before they're even reviewed, and finally, the retroactive opportunity, because in some states, if you qualified in past years but didn't know, you may still be able to go back and claim those savings. That last point is where things get interesting. We'll come back to it. Let me introduce you to Carol. Carol is 68 years old. She worked for 26 years as a public school teacher in Illinois. Back in 2001, she purchased her home just outside Springfield for $162,000. By 2024, that same property had been assessed at $310,000. Her yearly property tax bill, $7,400. And for more than 20 years, Carol paid that bill in full, on time, without ever questioning it. Then in 2024, a neighbor casually mentioned something called the Senior Assessment Freeze. Carol had never heard of it. She went online, checked her county assessor's website, and discovered she had actually been eligible since 2021. That's 3 full years of overpaying. 3 years. No notice, no reminder, no outreach from the county. And here's the truth: Carol's situation isn't unusual. It's extremely common. The AARP Foundation runs programs specifically because scenarios like this are happening to millions of seniors right now. And we haven't even reached the biggest trap yet, the part that affects people who actually do find the form. The document is typically called the Senior Homestead Exemption. Some states use slightly different names, like Senior Property Tax Exemption or Senior Citizens Homestead Exemption. But regardless of the name, the concept works the same way. Here's how it functions. Your property taxes are calculated based on the assessed value of your home. This exemption reduces that value before taxes are calculated. So if your home is valued at $300,000 and your state provides a $50,000 exemption, you are only taxed on $250,000. And that reduction applies every year as long as you remain eligible. Some states offer an even more powerful option. It's known as the Senior Assessment Freeze. Instead of lowering the value, it locks your home's taxable value at the level it was when you applied. Even if property values rise, your taxable amount stays the same. Your neighbors may see their tax bills increase year after year, but yours remains stable. Carol qualified for both programs. She didn't know about either one. Now let's look at real numbers across the country. In New Jersey, the Senior Freeze program can save up to $6,500 per year. In Texas, homeowners age 65 and older receive an additional $60,000 exemption, saving roughly $938 annually on school taxes alone. In New York, a 2026 law now allows local governments to exempt up to 65% of a home's assessed value. That's a major change this year. Over time, these savings add up. A New Jersey homeowner could save $65,000 over 10 years. In Texas, close to $10,000. In states with rising property values, a freeze can compound savings year after year. But here's something most people don't realize. Those figures assume you apply this year. In some states, if you qualified in previous years and didn't know, you can apply retroactively. Texas allows claims going back 2 years. Illinois allows up to 3. For Carol, that meant she had a chance to recover 3 years of overpayments. Now here's where things get even more surprising. These programs are not new. For example, Illinois has had its senior homestead exemption in place since 1994. That's over 3 decades, and during that time there has never been a universal system to notify eligible homeowners. No automatic enrollment, no letter in the mail, nothing. These programs are administered at the county level, and they rely entirely on the homeowner to find them. That's why the AARP Foundation created volunteer programs to help seniors identify and claim these benefits. In just 5 years, those efforts have helped recover nearly $10 million in property tax relief. That number alone shows how many people are missing out. But here's where the problem deepens. Even seniors who discover these programs often still lose out. Not because they're ineligible, but because of deadlines. And those deadlines are rarely communicated clearly. In Florida, the additional exemption closes March 1st, in New York City, March 15th, in Texas, April 30th, in Colorado, as late as July 15th. These dates don't appear on your tax bill. They aren't mailed to your home. If you don't already know to look for them, the deadline passes quietly, and you wait another year. But deadlines aren't the biggest issue. The number one reason applications fail is something else entirely. And this is the trap I mentioned earlier. Most counties offer multiple programs at the same time. The senior homestead exemption is different from the senior assessment freeze. Both are different from circuit breaker credits. And those are separate from standard homestead exemptions available to all homeowners. Each program has its own rules, forms, and deadlines. If someone submits the wrong form, the county doesn't correct it. They process it as is, deny it, and close the application. Weeks later, a letter arrives stating you didn't qualify. But in reality, you did. You just filed the wrong document. That's the first major trap. Here's the second. And this is the specific section that causes many denials. Most of these programs include an income requirement. In Illinois, the limit is $65,000. In New York City, it's $58,399. In Florida, it's $36,000 for the additional exemption. If you submit your application without proper proof of income, it is automatically denied. Not corrected, not returned. Denied. Closed. All because of one missing document. And that means another full year of overpaying. Here's what many people in Carol's position don't realize. In Illinois, if you qualified in prior years but never applied, you can file retroactively for up to 3 years. Carol qualified starting in 2021. She applied in 2024. That gave her a 3-year recovery window. This is one of the few situations where money may already be owed to you, without any investment, legal process, or financial product. It's simply a matter of filing the correct forms. Now here's what you should do next. Step 1. Confirm your eligibility. Most states require you to be at least 65, own your primary residence, and in many cases fall below an income limit. Check your state's rules carefully. Step 2. Locate the correct form. Go directly to your county assessor's official website. Search your county name along with Senior Homestead Exemption Application 2026. Avoid third-party websites. Step 3. Prepare your documents before starting. You'll need proof of age, such as a driver's license or birth certificate, proof of ownership, like a deed or mortgage statement, and proof of income if required, such as a tax return or social security statement. Submit everything together. Step 4. Find your deadline. Search your county name along with Property Tax Exemption Deadline 2026. Write it down. Step 5. Submit your application directly to your county office. This is RightGuard USA. If this helped you understand something most homeowners never hear about, hit like, subscribe, and share this with someone who might be overpaying right now. And tell me in the comments, had you ever heard of this exemption before today?